This is Radio Now 95.3 FM. Come for the news, stay for informed conversations.
From triple B to triple B negative, this delivers a sharp blow to the Pan-African lender's financial reputation. The downgrade, coupled with a negative outlook, signals growing concern over the bank's loan transparency, rising exposure to sovereign debt restructurings, and also weaker risk management practices. For this conversation, Radio Now's Stephen Imediogun speaks with economist Mukhtar Mohammed. Mr. Mohammed explains what the downgrade means and the implications it has on finance across the continent. He begins with a reaction to the news.
It came as a surprise for me. It is even the rating that is even shocking, because the rating is from to junk. And to know that same Afreximbank is one of Africa government most reliable bank in terms of loans, then it make it very shocking. And a lot of people that have collected loans from that bank now means that they might be paying a very high interest rate. For me, that was definitely going to affect a lot of business in Africa.
Can you tell us why this pronouncement by Fitch Ratings is being taken this seriously?
I think it's because of their international reputation. I think that's just it, because they've been in this for a very long time. And a lot of people believe it's rating than any other rating organization in the world. And because their rating sometimes has come out to be very, very accurate over time when they give their predictions. So coming from them now, I think that's why people are taking it serious. And most investors also look towards them to decide on where to invest because of their presence globally, and also, like I said, the integrity in terms of when it comes to their rating. And basically that is what has happened, because again, if you look at it, when some of these institutions are rated by some other institutions, they tend to not be so worried about it. But when it comes to Fitch Rating, I think virtually all of them seems to either come to the press to say no, it's not the way it is that they have rated them. But Fitch Rating is very, very important because of their, like I said, integrity in terms of what they do.
How does this downgrade in particular affect Afreximbank's ability to fund capital development projects across the continent?
I think this bank at the same bank that at the point we borrowed about $3 billion from them to be paying it through crude. So that's how important they are to the African economy. I think after the African Development Bank, I don't think there's so much a global bank like Fitch that Nigeria companies in Africa attempt to collect loans. That's to tell you how big they are globally. And so for me, and also for Africa in the African context also. So definitely it will definitely affect, and even my great country, Nigeria, will be affected, because what it means is that you might be paying higher interest for any loan that you've collected from gotten from them. Because what it means is, if you say like I said, the rating is not B downgrades to maybe downgrade or B negative, but for them to see that junk, it's unheard for them. What it tends to say that the bank is almost in a state of collapse. Because again, you won't be surprised if you see that. Like I said, this bank has been one of the banks that have loaned money to most African nations. Then if you look at the challenge in Africa as regard our economy, you won't be surprised, but you shouldn't be surprised what you are hearing or what you are saying, because again, after COVID came the Russian-Ukraine crisis, the currency devaluation, and that was what Nigeria actually had to run to them. And I'm sure a lot of African countries have done that, and maybe in terms of payment, most of them may be faulting, and this will affect their businesses.
Does this rating by Fitch, do you get the sense that it could affect other development banks who are operating in the African market?
Well, I don't think so. But it could also be a means of warning to some of these banks that are operating in Africa. But I don't think it will definitely affect them. It could be some sense of warning to them to also be able to do a lot of risk evaluation before they give out lend any mostly African countries. But also, I think it would also have an impact because again, with such rating, they might also most of these development might also be very, very careful in terms of what they give out these days because of this rating, and that way in turn also affect who they lend to, and that could be a problem to major African business and African countries that have depend on this organization for these banks for loan. So it will be a big challenge, I think, so going forward. But it doesn't mean that virtually all African banks are going to suffer from the same problem that they are going through.
So you've mentioned the possibility that countries who have taken loans from Afreximbank would probably have to pay back at higher interest rates. I wonder if you can speak to Nigeria's position. We've been talking about Nigeria's debt profile for a while, questions about how much we're owing and whether we should continue borrowing and so on and so forth. How good a creditor is Nigeria to, such things as as Afreximbank, bearing in mind that global oil prices have been dipping lately?
It's a huge problem for Nigeria, like we've said. And again, we are still looking for means to borrow. For me, the interest rate, we need to. But again, like you said, this was based on a particular amount. We don't know what that amount is. Sometimes these loans are not give public details. Details are not made publicly. All we know about that was that we collected about $3 billion dollars from them, which was supposed to use to stabilize the exchange rate at that time. At this moment, that exchange rate stability has not happened. So definitely, and again, we had the issue meeting our OPEC quota and also be able to pay this because we are paying through our crude oil. So it's definitely going to affect. But like I said, we don't have so much details of what was done or how it was done. But for me, I think it could have that negative impact on us as a nation in terms of the borrowing, the type of borrowing that we have done and what we are still doing in terms of borrowing.
Is there anything that Afreximbank can do to strengthen its policy role and perhaps maintain its importance in the African development finance space?
Of course, there's a lot they can do. Their shareholder will need to inject more liquidity. I think the challenge is definitely in the area of liquidity, negative liquidity. I think what they have to do is the shareholders of the bank, the major shareholders, will look at it and inject liquidity into the bank, and that could just be the game changer. I don't think it's all gloomy for them because of who their shareholders are, but I think they could also inject more liquidity, and that can just change overnight. Because again, rating can change. You've seen a lot of ratings today. Even Nigeria as a country has moved from unstable to stable. So those ratings are not fixed ratings. So they could do this evaluation again, and you realize that a lot of things has gone right. But I think majorly what their major shareholders will have to do is to inject more liquidity into the bank.
Mukhtar Mohammed is an economist speaking to Radio Now on Fitch Ratings' downgrading of Afreximbank's long-term credit rating. It's been downgraded from BBB to BBB negative. We'll be bringing you more as it unfolds in the sector on this matter.
This is Radio Now 95.3 FM. Come for the news, stay for informed conversations.